The year 2008 will forever be etched in the annals of financial history. The world watched in disbelief as a seemingly localized crisis in the US housing market rapidly escalated into a full-blown global financial meltdown. The interconnected nature of the global economy meant that the shockwaves of the crisis reverberated across the globe, leaving no country untouched. This unprecedented crisis demanded an unprecedented response, one that transcended national borders and required coordinated action from the world's leading economies. It was against this backdrop of fear and uncertainty that the G20, a group of the world's 20 largest economies, was thrust into the spotlight. Established in 1999 as a forum for finance ministers and central bank governors to discuss economic and financial issues, the G20 had primarily operated in the shadows of global governance. However, the 2008 financial crisis presented a unique challenge, one that necessitated a more coordinated and decisive response than ever before. The first ever G20 Leaders Summit, held in Washington, D.C. in November 2008, marked a turning point in global financial governance. It signaled a recognition that the existing international financial architecture was ill-equipped to deal with the complexities of a highly interconnected global economy. The summit was a watershed moment, highlighting the need for a more inclusive and representative forum to address global economic challenges. The 2008 G20 summit was not merely a reaction to a crisis, it was a catalyst for change. It laid the foundation for a new era of global financial governance, one characterized by greater cooperation, coordination, and a shared sense of responsibility for the stability of the global financial system. The roots of the G20 can be traced back to the late 1990s, a period marked by a series of financial crises that exposed the vulnerabilities of the global financial system. The Asian financial crisis of 1997 to 98 in particular highlighted the need for a more inclusive forum where both developed and emerging economies could come together to discuss and coordinate economic policies. The G20 was formally established in 1999 as a forum for finance ministers and central bank governors from 19 individual countries in the European Union. The group's initial mandate was to promote international financial stability, improve the global financial architecture, and enhance international cooperation on economic and financial issues. However, in its early years, the G20 remained largely a technical forum with limited political influence. The group's meetings were often overshadowed by those of the G7, the exclusive club of the world's leading industrialized nations. It was not until the global financial crisis of 2008 that the G20 truly came into its own. The 2008 crisis, triggered by the collapse of the US housing market, quickly morphed into a global financial panic. The interconnectedness of the global financial system meant that the crisis rapidly spread from the United States to other developed economies and then to emerging markets. The crisis exposed the limitations of existing international institutions such as the G7, which lacked the representation and legitimacy to effectively address a crisis of such global magnitude. The 2008 financial crisis was a perfect storm, a confluence of factors that combined to create the worst economic downturn since the Great Depression. At the heart of the crisis was a toxic mix of excessive risk-taking, lax regulation, and a culture of complacency in the financial industry. The US housing market, fueled by easy credit and lax lending standards, had experienced a prolonged boom in the early 2000s. Subprime mortgages offered to borrowers with poor credit histories became increasingly common, packaged and sold as complex financial instruments known as mortgage-backed securities. These securities, touted as safe investments, were sold to investors around the world, spreading risk throughout the global financial system. When the US housing bubble burst in 2007, the value of a mortgage-backed securities plummeted, triggering a chain reaction throughout the financial system. Banks, saddled with toxic assets, became reluctant to lend to each other, fearing that their counterparties might be insolvent. Credit markets froze, businesses struggled to secure loans, and consumer spending plummeted. The crisis quickly spread beyond the borders of the United States as European banks, heavily invested in US mortgage-backed securities, faced massive losses. The interconnectedness of the global financial system meant that the crisis rapidly morphed into a global panic, with governments and central banks scrambling to contain the damage. In the face of the rapidly deteriorating global financial situation, the G20 emerged as the primary forum for coordinating a global response. The first ever G20 Leaders Summit, held in Washington, D.C. in November 2008, brought together world leaders to address the urgent challenges posed by the crisis. The summit resulted in a coordinated action plan that included fiscal stimulus measures, monetary policy easing, and a commitment to strengthen financial regulation. Recognizing the need to restore confidence in the global financial system, G20 leaders pledged to inject trillions of dollars into the global economy to stimulate growth and prevent a complete collapse of the financial system. Central banks around the world slashed interest rates to historic lows and implemented unconventional monetary policy measures, such as quantitative easing, to provide liquidity to financial markets and encourage lending. Governments also announced large-scale fiscal stimulus packages, including tax cuts and increased government spending, to boost demand and support struggling industries. The G20's response to the 2008 financial crisis marked a significant shift towards greater international cooperation in addressing global economic challenges. The summit demonstrated the group's ability to act decisively and coordinate policies on a global scale. It also highlighted the growing influence of emerging economies such as China and India in shaping the global economic agenda. Section 5. Building a more stable future. Key reforms of the G20 Summit. The 2008 G20 Summit was not merely about firefighting, it was also about rebuilding the global financial system to make it more resilient to future shocks. The summit laid the groundwork for a series of reforms aimed at strengthening financial regulation, enhancing supervision, and promoting greater transparency in the financial system. One of the key outcomes of the summit was the agreement to strengthen the capital adequacy requirements for banks. The Basel III framework, developed in the aftermath of the crisis, introduced stricter rules on bank capital, requiring banks to hold more and higher quality capital to absorb potential losses. The G20 also agreed to establish the Financial Stability Board, or FSB, an international body tasked with monitoring the global financial system and coordinating regulatory policies among G20 members. The FSB plays a crucial role in identifying and assessing systemic risks, promoting financial stability, and developing and implementing international financial standards. Another important reform was the agreement to increase the resources of the International Monetary Fund, or IMF, and to reform its governance structure to give emerging economies a greater voice in the institution. The reforms aim to increase the IMF's lending capacity to provide financial assistance to countries facing economic difficulties and to enhance its role in preventing and managing future crises. Section 6. The unfinished agenda challenges and criticisms of the G20. While the G20's response to the 2008 financial crisis was widely praised, the group has also faced criticism for its handling of the crisis and its aftermath. Some critics argue that the G20's response was too focused on bailing out banks and financial institutions, while not doing enough to help ordinary citizens who were struggling with job losses, foreclosures, and declining living standards. Others criticize the G20 for its lack of transparency and accountability. They argue that the group's decision-making processes are opaque and that it lacks mechanisms to ensure that its members follow through on their commitments. There are also concerns about the G20's legitimacy, as it is an unelected body that wields significant influence over global economic governance. The G20 has also struggled to maintain unity and consensus among its members, particularly on issues such as climate change, trade, and the regulation of the digital economy. The group's effectiveness has been hampered by geopolitical tensions and diverging national interests, making it challenging to reach agreement on coordinated action. Section 7. Beyond the crisis, the expanding role of the G20. Since the 2008 financial crisis, the G20's mandate has expanded beyond its initial focus on macroeconomic and financial issues to encompass a broader range of global challenges. The group has increasingly engaged in issues such as climate change, sustainable development, global health, and digital governance. The G20 has played a role in shaping the global response to climate change, with members making commitments to reduce greenhouse gas emissions and transition to cleaner energy sources. The group has also been involved in efforts to promote sustainable development, including initiatives to improve infrastructure, promote financial inclusion, and reduce poverty. The COVID-19 pandemic further highlighted the G20's role as a forum for coordinating global action in times of crisis. The group played a role in coordinating fiscal and monetary policy responses to the pandemic, as well as in efforts to ensure equitable access to vaccines and medical supplies. Section 8. The Road Ahead. The G20 in a Changing World. The 2008 G20 Summit marked a turning point in global governance, propelling the G20 to the forefront of efforts to address global economic challenges. The summit demonstrated the group's ability to coordinate policy responses on a global scale, and its willingness to take unprecedented measures to stabilize the financial system. As the global landscape continues to evolve, the G20 will face new and complex challenges. The group's ability to adapt to these challenges, to maintain unity and consensus among its members, and to effectively address global issues will be critical for ensuring a more stable, sustainable, and prosperous future for all.